Good afternoon, everybody. It's Nick here. Hope you're all doing well. We're on Facebook, on the Scottish Property Podcast Facebook page. We're doing a wee live, put an announcement on earlier on that myself and Stephen were going to come on. Unfortunately, Stephen Clark can't make it because he is pretty sick. So it's just myself. And the purpose of this live is really to get some engagement with you guys, get some questions, get some thoughts from you about all the craziness that's going on at the moment. And it is mental what's happening in the property market. Well, not even the property market, the global financial markets, the geopolitics, all the economy stuff at play at the moment. It's trying to keep up. It's just a fast changing environment. So we'll probably just go through things one by one, see where we're actually sitting at the moment and see what we're dealing with. If you've got any comments and questions, please put them in the chat. We've got a couple of Facebook guys checking in here. Hi, I can't see your name, Facebook user, so please put your name in when you're speaking to me so I know who it is. So let's just reel it back to when it all started going to a new level of madness, and that was probably last Friday. So a week past Friday there, I think it was the mini budget. So we had Kwasi Kwarteng and Liz Truss basically clubbed together and announced their new mini budget and their plans for growth for the economy. So they see the way out as growing the economy, cutting taxes, which we had the U-turn about that just recently as well. And it all went to shit after that, basically. With the mini budget announcements, the markets, the financial markets did not react well. Basically, the bond market prices plummeted, the interest rates, the rates on bond, the yield rates on bonds went up crazy, and the mortgage lenders did not like it either because they could not guarantee what they were going to be getting their wholesale lending prices at. So they had to pull all their rates from the market. So there was like 900 mortgage rates pulled from the market after the mini budget as well. So that didn't really go down well, caused a lot of panic. But, you know, a lot of people saying, oh, this happens all the time. Lenders pull rates. Yes, that does happen, but not on that scale. I mean, just to kind of look back on that, the Bank of England had to intervene there to prop up the pension. The pensions were close to collapsing, so Bank of England had to intervene and put in this 65 billion into buying up UK government gilts to save the pension funds, basically. So then there was all this panic with lenders who the interest rates were already going up anyway. Okay, interest rates were going up. There's no doubt about it. Things were climbing, but now things have gone to that extra level because they're now pricing in the Bank of England rate hike for November's meeting, which they reckon could be 1% to 1.25%, because this is the only way they're going to stabilize the markets if they make a big announcement. Otherwise, foreign investors have no confidence in the UK at the moment to buy the debt, to buy the government bonds. So the only way they can try and establish a bit of credibility is if they do this big interest rate hike in November. So this is what all the mortgage lenders are now factoring into their costs. So, like, I don't know, I mean, I'm not a mortgage lender, go and get the latest deals. But for example, on a limited company buy to let, you could recently get a rate of about 5%. Now, the mortgage works have come out, they're talking about, I think it's like 6.6, 6.7% for a limited company buy to let. So once you start getting up to those rates, guys, you need to start looking at your spreadsheet and looking at your costs, because things don't really look that great in terms of cash flow. Now, you might get high yielding property, yes, but you've got to look at the return on the cash invested. That is the main figure. And if you're not cash flowing as a business, you're dead. You're not making any money. And this is the problem. And if it goes, you know, like I can handle 6%, I could probably handle 7%. But when it starts getting 8% plus, that is a real issue. So check that out, guys. Got any questions so far as we go through this? What are your thoughts on the mini budget? I mean, it's an absolute racket, and they obviously had to do a U-turn on the higher rate cut on tax, the 45% tax rate. So they did the U-turn on that, which makes them look even more incompetent. And markets have recovered slightly, don't get me wrong. So we saw that pound collapse after the mini budget, but it has recovered. So there is some stability again. But I just think that a lot of people say, well, don't worry, interest rates are only going up temporarily, right? So things will come back down again, don't worry. But really, what you need to think about is what the underlying problems here. What have we been experiencing? Why were rates rising anyway? So we had 10 years plus of cheap lending, record low interest rates. We had 10 years of printing money. The Bank of England were printing money into the economy, buying up the government bonds. It's called QE, pumping all this money into the economy, which ended up resulting in part of the inflation problem that we've got just now. We also have the war in the Ukraine, which caused a global supply shortage on a lot of things. We have the energy crisis, which is stemmed from that as well, which we're trying to get a handle on. So we have all these other factors at play. We have China. China has still got their zero COVID policy, which is causing problems with supply issues as well. And at the moment, we've got a government, the UK government, not the Scottish government, trying to go one way, try to grow the economy, and they're now printing the money again. And on the other hand, we've got the Bank of England, they're trying to rein it in, stop people spending money by raising interest rates. So we have no collaboration at all. It's in a bit of a state at the moment. But rather than me just ranting, then let's have a look at things and see how we can protect ourselves. So up till recently, like I was looking at my portfolio and looking at my buy-to-lets and thinking, right, I need to fix myself in. I would go for the 5-year fixed rates. Yes, that was going to work. But now that doesn't really make much sense because the 5-year fixed rates have gone up so high. So you really need to reconsider, especially if you're doing any new buy-to-let purchases, if it's actually worth doing. Oh, excuse me, somebody's trying to call me. If it's actually worth doing, or whether it's worth just putting money in a savings bank. At the moment, there's some guaranteed rates for a year in savings banks for 4% plus 4.11% you can get at the moment. You can put in £25,000 and get about £1,100 back over the 12 months with no risk, with no tenant phone calls, with no headaches or boiler issues. So I'm not trying to spread doom and gloom, guys, but there is serious problems at play here. And anybody that you see on your social media that's telling you that this is a perfect opportunity, this is the perfect time to get involved in property investing, or else they're asking you for money, then really you need to be aware of the issues at play. And I don't think there's a quick fix to this. What does everybody else think? Do you think this is a great time and a great opportunity? Do you think that it still makes sense to invest in buy-to-let property? How do you perceive interest rates playing out? Do you think that this will be fine by middle of next year? You've also got the problem of homeowners. What do homeowners do when they come out of their fixed rate deals in 2023? There's 1 million people coming out of fixed rate deals in 2023. Their mortgage payments could go up £300, £400, £500 a month. Obviously, there's going to be a lot of forced sellers. See, to be honest, guys, a property crash does not concern me, right? A crash, I'm actually quite excited about. As an investor, that's where the opportunity is, right? What does concern me is two things. You've got interest rates rising, and when will it become a point where rising interest rates are actually going to have an effect on what they're trying to solve the problem of inflation? That's the key thing. Then maybe they'll start bringing the rates down once inflation comes back down. But again, so many factors at play with inflation. Number two thing that worries me is our Scottish government. The SNP and Green Party are very dangerous for our property businesses. Excuse me a second, somebody's trying to call me again. The SNP and Green Party are very dangerous, and they have absolutely I was going to come out a really bad word there, but I need to watch and not swear too much. So, with the latest announcements by Nicola Sturgeon on the 6th of September, she's obviously announced that there's a rent increase freeze and also an eviction ban. Now, the bill for that is getting discussed in Parliament this week, and it's expected to be pushed through Parliament. And that will be a law where you will not be able to increase the rent until at least March 2023. But to be honest with you, it's probably going to get extended. They've got written into the legislation that they can add on an extra 6 months at a time, right the way through to March 2024. So probably expected to be in that till, again, it all depends on if we sort out the cost of living crisis and all that. I don't think it's going to happen very quickly. So the good thing about it is there's nothing in there to say that when a property comes up for relet, so say the tenant hands their notice in, they move out, then you can take that property, that empty property, and you can increase the rent to whatever market conditions will allow you. So what's happened is any properties that come up for relet, landlords are really, really pushing it to the maximum. And personally, as a landlord, I did not want to be the guy who is a greedy landlord who tries to squeeze as much rent out as possible. I want a good tenant in there who's paying a decent level of rent to cover my costs and make a small profit. And for me, it's a long-term investment. I'll invest in that property, make sure it's a good home for somebody. I do not want to be ripping the arse out of it, for a better term. But the government has now forced me and other landlords to really, really push things up on new rentals so that we can now absorb the costs in some of our properties that are coming to the end of fixed rate terms on our interest payments are going sky high. So this is what's causing a huge surge in rents in Glasgow, Edinburgh, and all over Scotland and all the cities. There's a massive shortage of supply in the rental market, and people can't get rental properties. We have like 300 to 500 inquiries on each one that comes in that sort of gets advertised. So we've got a couple of comments, guys. Is there any questions? Because I see a lot of people commenting, like giving their view, but let's just see if there's any questions. Okay, so uncertainty is never good. Absolutely. Well, that's what happened with the mini budget. There was all this uncertainty. Like, okay, we're going to cut taxes. We're going to promote growth. Yes, okay. Like that sounds good. Like, who doesn't want to cut their taxes? Who doesn't want to pay less tax? Of course, that sounds great, right? But where's the fucking money coming from? Where is the money coming from? It's getting printed, it's getting borrowed, and that's why the whole thing collapsed, because there was no plan, long-term plan, and it makes our country look undesirable for foreign investment, which is why the bond market collapsed and the pound collapsed as well, which took things to that whole new level. Genuine question. The rent freeze is not through government yet, so can we serve provisional notice? No, it's the 6th of September, guys. So it's not through yet, but it will go through. I think it was like 80 to 20 vote or something like that. I mean, it will go through. It's going to get fast-tracked through this week. There's no doubt about it. This is happening. So the 6th of September is the cut-off. So if you put out a rent increase notice prior to the 6th of September, bear in mind you need to give 3 months notice. If you did that before 6th of September, you're still allowed that will still be allowed to go through, and you'll still be allowed to increase your rent. There is a wee caveat to this, and there is a wee extra bit to the legislation. So apparently you can apply to the rent officer to increase your rent if you have faced substantial increase in costs. So, for example, interest rates rising, but it has to be over the last 6 months. and you can only claim for up to 50% of your costs, but no more than 3% of the rent level. So in effect, you can only put the rent up 3%. You can apply to the rent officer to put your rent up to 3% of the rent, but no more than 50% of those costs. Exactly. So 50% of costs, as somebody's saying, but it's a 3% increase in rent maximum. And you have to apply to the rent officer, and it needs to be over the last 6 months. It sounds like it's quite it's not exactly straightforward, put it that way. Colin Miller, with interest rates going up, what are people doing to reduce risk? Okay. So with interest rates going up, you have to have a really good mortgage broker at the moment. You really need to sit down, look at your options. But even your mortgage broker is not going to be able to predict the future, right? So they're not going to be able to say interest rates will come down in a year's time. There's no point in fixing for 5 years on a 6.8% because after 2 years you'll be able to get a better deal. They can't say that. Nobody knows. So what are people doing to reduce risk? You could pay that, like if you've got cash, you could possibly pay down a bit of the mortgage. That's personally not what I'm doing. But one way you can certainly reduce risk is any new rental properties that come on the market, really, really pump them up to the highest level you can get. And it's sad because you're actually squeezing out the people that they're trying to help, because at the moment I've got one in Scusser Street in Cadder. Now, this one would be perfect for a young family, a single mum, but I've had to push that rent up so high because I can, because of the demand, and that's no longer taking into account that tenant profile, that young family on low income, that single mum who may be on benefits. That's squeezing out that market, because I've now gone for the foreign student market, because, okay, it's not in the prime West End of Glasgow, but it's in an area where it will still be rented, and there's still plenty of inquiries from foreign students because they've got the money, and they'll pay 6 months rent up front. And if I'm honest with you, the way things are going, if I only get a short-term tenancy of 6 to 12 months, then that way I can review the rent after they move out after a year. It's not the way I normally like to work. That is not the way I want it to be as a landlord, but the government are driving us to be that way. So any recommendations for a good mortgage broker? Tonight, guys, we have the Scottish Property Podcast networking event. They're all over the country: Aberdeen, Dundee, Glasgow and Edinburgh. We have mortgage brokers who we partner up with at all the events. So if you get yourself along to one of those events, there's going to be good mortgage brokers there. There's going to be people there who know their stuff. All right, so get yourself booked in. Go to the Scottish Property Podcast website, and there's an area there for events you can book on. Can't keep up with these questions. There's a couple on Instagram. We've got Quinergy commenting. How you doing, Quinergy? Allow easy borrowing from bringing properties up to a better standard, as long as it helps improve EPC level. This will increase stock value and help tenants save money. Allow easy borrowing for bringing it. I'm not sure what that means. Colin Nisbet has recommended some mortgage brokers. Everything that the Scottish Government are doing is completely fucking knows the legislation is designed to help. Absolutely couldn't agree more. Excuse me. It's mental though, because do you know what's happening? The public don't see what the mechanisms are and the supply and demand forces that are driving the property market. What they're seeing is Nicola Sturgeon standing up there in Parliament and saying, we will protect you. We will do whatever it takes to safeguard you in your home. Everybody should feel secure in their home. So that sounds great. Who would not vote for that? And at the end of the day, landlords are like less than 10% of the vote. So who cares? Nobody's going to lose sleep over a landlord not getting their rent, right? But what people, the general public, don't understand is that this is actually, like the Facebook comment says there, this is going to have the negative effect. Landlords selling up, people putting up their rents, a shortage of supply of rental properties on the market, and eventually it will have a terrible impact. It already has. It's already happening, guys. Other people that need to take responsibility are the universities. Universities are hugely oversubscribing their numbers. They're getting greedy as well, and they can't guarantee foreign students accommodation. So we're finding that in Glasgow, mass influx of foreign students, and they don't have anywhere to live, basically. Absolutely. Successive governments have failed. That's the whole problem with governments, isn't it? Nobody's looking at the long term. Nobody's looking to see how they can solve the underlying problem. The underlying problem is they need to build more houses, right? That's the bottom line. And nobody cares about that because that's going to take time. That's a 20-year plan. But governments, politicians don't have it. Look what's happening down England with Liz Truss. They're already calling for her head. She's only been in the job a week, and they're already going against her, saying that she needs to be out by Christmas. So politicians don't have time, so they just look at the short term. Let her try and tell Tesco's that they can't change prices and at the same time can't prosecute shoplifters. They'd rightly tell her to foxtrot Oscar. She's interfering with private businesses. Another valid point, what other businesses told that they can't increase their fees to their customers because their costs are going up? Again, it's just one of those ones, because housing is at the real centre and one of the major policies for government. We are caught in the middle of the storm, basically, as landlords. So we can moan, we can rant, and I've enjoyed having a wee rant here. It's always good to get a few things off your chest. But tonight we will be going into the numbers, guys. We will be looking at the networking events, really looking at how things are going to work out for people. And there's no sugarcoating this. We have got no course to sell, right? We're not trying to tell you property investing is your route to financial freedom. We're looking at the numbers, the hard facts about what is out there at the moment in the market. Jonathan from Bricks and Mortar Mortgages is going to help us with that tonight. We're going to put up spreadsheets. We're going to see about deals. We're going to see about opportunities, because there is going to be opportunities as well. You know, do you look at it and think you can pick up a deal now? You can actually get a deal coming in 2023. Hold on to that. Cash buyers, great opportunities. Foreign investors, great opportunities. If you're buying with dollars, great time to be buying with dollars. 7 p.m. Well, the events start at kickoff at 6:30 for registration, and they kick off properly at 7 p.m. So it's a 6:30 for 7 start. In Glasgow, I'll be there tonight with Sally Beard. We've got Sally Beard coming along, who built a huge letting agency in Glasgow. We're sold out at Glasgow, I'm pretty sure. And it's been great talking to you guys. Sorry Stephen couldn't make it, but he's in his sick bed and hopefully he'll be feeling better soon. Big love to you, Stevie boy. He's the positive one, by the way. Stephen Clark is the positive one, and I'm always the one filled with doom and gloom. So that's what you're lacking today on this live. So, guys, thanks for listening to me. We just got to roll with it. We need to roll with it and see what happens. And if anybody's got any better investments, then let me know. At the moment, you can get 4.11% in a savings account, which is starting to look very, very good. But let's see what happens when the mortgage lenders start coming in, guys. We need the lenders to come back and start competing against each other. The banks have got money. The banks are good. They're in good positions. They want to lend. They want to make money. But there's so much uncertainty, and the markets have been rattled so much that they're unsure about making money in the future because the rate hikes and the bond market, basically. Great. James Watson, I'll sell up before ditching my agent. Personal opinion. What? Don't get that. He's going to sell before ditching his agent. Hang on. There could be another knock-on effect. People might be tempted to ditch their letting agent. Oh, sorry, I didn't read the previous comment. People might be tempted to ditch their letting agent and self-manage to help the bottom line. Well, if people do that, then my business is fucked. That's all I can say. So I would say this. Okay, so from my point of view, I would say there's never been a better time to use a good letting agent, because we're coming at a period of very uncertain times where people may be struggling to pay rent. Do you know all the different legislation? You need to know the ins and outs. You need to know how to serve notice. You need to know how to deal with rent arrears. You need to know how to go to eviction tribunals. You need to know all this stuff, guys. And if you're going to ditch your letting agent, then you're out by yourself. And do you really want to be dealing with that? But yeah, you're absolutely right. You know, people are going to look to save money somewhere. That could be through management fees. And yeah, you're right. On that note, I will leave you. Love you and leave you guys. If you're looking for a good letting agent, get in touch. Thanks for listening to me rant, and hopefully see you at the Glasgow event. Oh, one more announcement, please, while you're all here and listening. The Christmas ball, we're putting on a party like no other party. It's going to be at the Village Hotel in Glasgow on the 3rd of December. It's the Scottish Property Podcast Christmas Ball. Everybody's going to get glammed up, suited and booted, and we've got live music, we've got a band, we've got a DJ till 1 a.m. It's a really nice venue down in the village. It's going to be really great. It's a Saturday night as well, so you can book a hotel room. There's a promo code for cheap hotel rooms, and everybody can have a right good piss up, and it'll be great to connect with all the community and all the great and good of the Scottish property world. So fantastic, guys. I will speak to you later.